Hello, we are in the midst of a raging bull market. The ferocity of this bull run has surprised even the eternal optimists. How long will this bull run continue? What are the threats to this bull market? These are the relevant questions from the investor's perspective. The stock market legend John Templeton has given a beautiful description of the evolution of a bull market. Templeton said, and I quote, "Bull markets are born on pessimism, grown on skepticism, mature on optimism, and die of euphoria." So there are four stages according to Templeton. The first stage, pessimism. When the market starts growing, the bull market's seeds are sown. Then the stage of skepticism, when there won't be any conviction in the bull market. The third stage of optimism, when the markets will be driven higher by expectations. And finally, the markets dying of euphoria, the bull market ending of euphoria. I think we are in the third stage of optimism in the market. Actually, Templeton's description of the evolution of bull market fits with the present stage of the present bull market in India. The present bull market was born after the crash of March 2020. There was complete pessimism all around. The country was in complete lockdown. The economy slipped into a massive recession. There was massive unemployment and pain. That was when the bull market slowly started emerging. The next few months, when the market started slowly rising, there was disbelief, there was skepticism. Even the bulls, optimists, started saying that this market is not likely to continue because there is an economy market disconnect. When you have such a major disconnect between the economy and the markets, it will be only temporary. That was the skepticism. Now there is optimism. The markets are driven by optimism because GDP growth, the next year, it will be very impressive. Already the economy is on the growth path. This year, there will be 7.7% GDP contraction. That is well known. But then there is a consensus that in 2021-22, India will be the fastest growing large economy in the world. So with this optimism, fundamentals also are supporting the markets. The results, the Q2 and Q3 results, have been much better than expected. So we are now in the stage of optimism, not in the stage of euphoria. Now the question is, how long will this stage of optimism last? How long can optimism last? That is a relevant question. The answer is we don't have clarity on that. There are no clear answers. It's a very tough call. There are people who believe that this bull run can last longer than most people think. Many people believe that this is just the beginning of a bull market. There are people who believe that this can be similar to the bull run of 2003, 2007. Comparisons are often made to that massive bull market of 2003, 2007. In that massive bull market, the Sensex galloped from 2,350 around May 2003 all the way to 21,000 by the end 2007. The Sensex multiplied almost 9 times. There are many dissimilarities, but there are some similarities also. That bull run was also characterized by massive foreign portfolio inflows. That bull market also was characterized by strong fundamental support. The GDP grew by more than 8% during this period, and corporate earnings grew by around 27-28% during the 5-year period. That period again was characterized by declining dollar. So these are the similarities. We are not very sure whether the GDP growth and corporate earnings will continue, but if it continues for an extended period of time, then it is quite possible that this optimistic phase and the bull run can last much longer than most people think. Of course, we should be we should be mindful of the threats to this bull market that can come at any point of time. So what are the possible threats? I will just mention 2 and then go to a hypothetical 3. The first threat to this bull market, the first possible bump in the journey of this bull market is a possible re-emergence of inflation in the developed world. And inflation has been conspicuous by its absence in the developed world, particularly in the US during the last 12 years. They have been trying to push inflation to 2%, but not succeeding at all. But with this combination of a massive monetary and fiscal stimulus that they are having now, it is possible that suddenly there can be a surge in inflation. If that happens, then the Fed will have to apply brakes to its quantitative easing program, the bond buying that it is doing now. It will have to announce a tapering of the quantitative easing bond purchase. If that happens, there can be a big correction in the stock markets globally. India too will be affected. But right now, there are no possibilities at all of inflation rising immediately the next few months. No possibility of an inflation rising suddenly. And the Fed calling off its bond buying program. That is not the consensus now. The consensus is that the quantitative easing and liquidity infusion will continue. But if inflation surges, then that can be a threat. Another possible bump on the road of this bull run is a possible re-emergence of virus in another mutated form. There are various strains of the virus in different parts of the world. If a new strain of the virus, a mutated version of the virus, which is immune to the new vaccines that we have right now, if that happens, well, that can be very, very problematic. But perhaps the threat to this market can come from a totally presently unknown factor. Most of the threats emerge from unknown factors, some black swan events. So there can be some unknown factors, unlike what I just mentioned, the 2 factors. If some unexpected factor, a geopolitical factor, for instance, that can spoil the party. So we should be always aware of these threats in the market, the potential threat to the market, because when the valuations are high now, going by all parameters, price earning multiple, price to book, market cap to GDP, valuations are high. But the valuations can come down if economic growth and earnings growth surprise on the upside. That can't be ruled out. But at high valuations, there are possibilities of corrections. Investors have to be bothered about that, concerned about that. So right now, there are fundamentals supporting this bull run. Therefore, it makes sense to remain invested. Investors should ride this bull, but be aware of the bumps in the road ahead for this bull. Thank you.